Even though JPMorgan beat on earnings, which were reported this morning, the stock is falling, down about 2.7%. Yes, they exceeded expectations. Big banks begin reporting third quarter results, but the markets just don't love how they beat expectations. Okay, so here's what happened. JPMorgan reporting $30.44 billion in revenue, $3.74 per share in EPS. And in essence, a lot of the profits were propelled in great part by the release of reserves that had been put aside during the pandemic. CEO Jamie Dimon got on the conference call, sounded a very optimistic tone that the economy is still on a positive post-pandemic trajectory.
I think we should look at the big picture here, which I think is always important. I mean, 2 years ago, we were facing COVID, virtually a Great Depression, global pandemic, and that's all in the back mirror, which is good. So by hopefully a year from now, there'll be no supply chain problem.
Okay, hopefully. But guess what? Jamie Dimon also said, Dick Bove, that he says inflation is definitely going higher, although he's not worried about it for the bank. Let's get to you and what you saw in the bank's quarterly release numbers. And we've got a whole bunch of other names, too. Dick Bove, of course, with Odeon Capital. Thank you so much for being here. So let's tackle JPMorgan first, Dick.
Okay, basically, what you said is exactly correct. All year, banks have been having a great deal of difficulty in increasing their operating earnings. But what they've been able to do to obscure that fact is continue to reduce their loan loss reserves. Now, in the beginning of the year, investors were accepting the fact that they were doing this and did not hit the stocks. But now, investors are saying, oh, wait a minute, you know, we've been 9 months into this year, and these companies can't increase their operating earnings. If they can't do that, and they continue to play accounting games, how much can they be worth? And I think that that's one of the key reasons that this, JPMorgan number frightened most people. In addition, Jamie Dimon frightened most people. He said three things. Number one, he wouldn't commit to the fact that inflation would be transitory. Number two, he said the base case for the economy, even though he said it's going to be higher, is not going to be as high as it was a few months ago. And number three, perhaps the worst thing he said, was that he's on a 10-year program to allow the bank to meet the competition in the marketplace. And what banks have been dealing with all year is not the fact that there's excess liquidity in the economy, but the fact is that they're losing market share. They're losing market share to the capital markets companies, and they're losing market share to non-bank financials. And therefore, what Jamie Dimon projected today was a little bit of fear as to where JPMorgan is going to be over the next 12 months, and that's resulted in the selling.
Why isn't he fearing inflation? He said, yes, it'll go higher, but ostensibly, as inflation goes higher, maybe the Fed starts to raise rates. That helps bank earnings, obviously, because they can charge more for lending. They make more revenue. But he also said people are still going to open bank accounts. They're still going to be fine with inflation, at least for the banking sector. Let us spin it forward to tomorrow. We are getting a whole host of names. Wells Fargo, we've got Citigroup on deck. Which ones in this panoply of names do you feel will do well, and what are you concerned about with some of the other names?
Okay, just going back to inflation for a second. Remember, banks make a fortune in inflationary periods.
Right,
I mean,
right.
In the 1970s, banks benefited enormously from inflation because their unit volume goes up and their margins go up. But in terms of the companies coming out, the one that I'm going to be looking most closely at is Bank of America. Bank of America has been losing market share on a consistent basis now for a few years. And Bank of America, as a result, has changed or turned over 25 top executives in the company to get the bank back on the pace of trying to increase its share, growing its business. So if they're able to do that, I think Bank of America could be an extremely interesting company. Wells Fargo is in, I think, the same position as most of the other banks out there. It's dealing with the fact that loan volume is weak, margins are under pressure, and it's still facing all of these problems with, fines and problems with litigation. But I think Wells Fargo will emerge as one of the strongest banks in America over the next few years. Citigroup is an international player, and I don't like international banking at the present moment, China being one of the big reasons, for that. I think that Citigroup is the weakest of all of the banks that I just mentioned, and therefore that's one that I would tend to stay away from.
Citi down about 0.5%. Most of the financials are lower today. Give me one line on Goldman. They're reporting Friday.
I love it. I mean, you got to buy Goldman, you got to buy Morgan Stanley. You know, they're going to show big numbers, and they're going to show big numbers because merger and acquisition business, which is their most profitable business, soared in the quarter. Well, JPMorgan had a tripling in even smaller companies. Jefferies tripled its money from M&A, and these companies are the leaders in M&A. So you got to be buying Goldman, and you got to be buying Morgan Stanley.
Dick, always a pleasure. Thank you so much for coming on.